Bitcoin miners have this amazing capability of shutting off quickly and coming back on quickly, allowing the grid operators to balance. And what very few people realize is the grid is not this constant amount of energy where the same amount of energy goes in and the same amount of energy comes out at all times. It varies depending on load. You as a consumer always want electrons coming out of the wall. The problem is generators can't put more energy into the grid than you're taking out. And if you look at during the course of the day, there's a lot of variation to how much energy people are using. And so the grid operators have to constantly balance the load on the grid and the generation that's going into the grid. And it's really hard to turn on and off a power plant, but it's really easy to turn on and off Bitcoin miners. And so
welcome to the Rose Show podcast. Thank you so much for joining us. I have the honor of being here today with Fred Thiel. He is CEO of Mara. They are setting the pace for the Bitcoin mining industry. They are the largest, most energy efficient, and most technically advanced Bitcoin mining companies. And they are also one of the largest holders of Bitcoin among publicly traded companies in North America. Very impressive right there, Fred. How are you doing today?
I'm doing great. Thanks for having me on.
Absolutely. Thanks for being here. So, Fred, I'd like to begin with your background to Bitcoin as well as Mara. I know you were a director. You have a strong background in crypto overall and blockchain. Please tell us about that.
Sure. I've been in the tech industry for, over 40 years. I started writing software for banks in London when I was in my, 17, almost 18, doing summer internships, and I've pretty much worked in every segment of tech: software, hardware, semiconductors, internet, digital games, digital media, IoT, kind of data comms, you name it. And I've had the good fortune of being able to take some companies public, do a lot of M&A, sit on a lot of boards. For a while, I went to the dark side and ran the investments for a private equity fund, investing in technology, buying software companies, and also co-founded a venture fund. And I've spent a lot of time advising large private equity firms and VCs relative to how to invest in tech. And I guess you could kind of say my specialty has always been identify trends and then transform companies so that they can take advantage of them. Back in kind of the mid-teens, in 2015, 2016, started getting interested in Bitcoin. You kind of viewed that Bitcoin had gotten enough velocity, if you would, and momentum that it was becoming more and more relevant. The problem with Bitcoin was that it was trading in these islands of exchanges in different parts of the world, and it was really hard for people to really aggregate liquidity, and you were constantly having to move money around, and the banks made that very difficult. So came up with a concept that became Sprocket, which was essentially to build an exchange whose order book essentially aggregated all the order books of other exchanges, so you could trade in one location with one account, one liquidity pool. Then, being the person that I am and having worked in banking, kind of went and talked with the regulators. And in the US, legal advisors told us, maybe 5 years, I don't know how many $1 million, you're going to have money transmitter licenses in 50 jurisdictions, et cetera, et cetera. Okay, not going to happen in the US. Went to Switzerland, which at the time Zug had the crypto valley had started. They were very open to Bitcoin, and spoke with FINMA, the Swiss financial authority. And they said, yeah, you could start something here, but you're really going to end up having to have a banking license. And as a US company, you'll never get a Swiss banking license. Okay, so we went to the neighbor, which was Liechtenstein, which actually is a member of the EU as well, which had certain benefits, and talked with the FMA, the Financial Monetary Authority there. And they said, yeah, crypto, we don't have any laws about crypto. And so what would it take for us to be able to trade crypto? And they said, well, maybe we'll write a crypto law. And so we engaged with a law firm, and they eventually wrote a crypto law, which essentially treated the buying and selling of Bitcoin and Ether as a foreign exchange. And so you only needed a Forex license to do that. So we got a Forex license, and we started doing over-the-counter trading. And then, things went merrily on their way until the FMA came to us and said, guys, you're getting too big. You need a banking license. And so it was decided that we kind of were going to hand that business off to some locals who had that ability. So about the same time, I had joined the board of Marathon. Marathon's history, I mean, it's been a public company for many years and gone through a lot of lives. It started actually as a vanadium mining company, actually extracting minerals, interestingly enough, and went into oil and gas, had another iteration doing some real estate stuff, and then became a patent troll. And Marathon Patent Group was a company that acquired patents in a variety of areas. And one of the patents that Marathon Patent Group acquired was an underlying patent for the basic technology of using voice, a limited instruction set using voice to control electronic devices. What does that mean? Well, that's basically Siri and Alexa. And so Marathon Patent Group sued Apple, and after a long period of time, Apple settled and paid a large licensing fee. And then Marathon went and happily sued Amazon, thinking they would get the same outcome. Well, Jeff Bezos being who he is, that case is still dragging on. Needless to say, Marathon started running out of money. They went and had to get recapitalized, and the people who kind of took over the business at that point wanted to get into the Bitcoin mining business. And so they asked a good friend of mine to become CEO. That was Marek Okamoto, who I'd known for many years. And he promptly turned around and said to me, "Hey, you know crypto, could you join my board?" And so I joined the board in 2018. And then Marek's focus initially was fixing the balance sheet, getting the company to a place where it could start buying miners and mining, and company started some small mining efforts. And then in 2020, with the balance sheet kind of fixed, we were able to go out and start raising some money. And kind of coincidentally, Bitcoin was also in ascendancy really in that period. It started ramping in 2020 into 2021. So we were able to raise quite a lot of money, placed a huge order with Bitmain, which is the largest kind of hardware provider in the space. And then promptly set about trying to find a place to put those miners, which we did. And fast forward to kind of early 2021, and Marek decided he wanted to retire. I had been scaling businesses all my life, so the board kind of decided that, well, Fred, you're a board member, you know the business, you know crypto, why don't you become CEO? And they twisted my arm enough to convince me to go back into an operating role. And so in April 2021, I was employee number 5, and today we're 40-ish people, and we've gone from very small amount of Bitcoin mining to being one of the largest miners in the world. And super exciting. I've been able to build a great team that I'm very grateful for. And, we've been able to time the capital market cycle. So we were able to raise capital at very attractive rates. And we're sitting in a position today where we have a lot of cash and Bitcoin on our balance sheet. We have a lot of Bitcoin that we're generating. I think, I saw a chart that somebody published yesterday on the internet, which showed we had won 180 blocks in the month of July, which is great work by the team, record number for the company. And we're continuing to expand internationally. We have a project in the UAE, where in Abu Dhabi, where we're now mining Bitcoin in partnership there with the Sovereign Wealth Fund. And that's exciting. That project will be fully live by the end of this year. And we're also looking at other parts of the world, both in the Gulf region, South America, Asia, Africa, et cetera, as well as in the US. And we'll continue to grow. We've also built a very vertically integrated tech stack. So not unlike Apple, who has kind of, you think about Apple, they have 18% market share in the smartphone business, but they control 80+% of the profits of the industry. We have our own mining pool. We operate we have our own firmware for Bitmain miners, our own controller boards. We've co-developed some Immersion technology and continue to do a lot of development in that space. And we also we're one of the initial investors in a company called Authorizing, which is a US-based Bitcoin miner manufacturer. The founders of that company come out of nameplate excellent ASIC design companies like Palo Alto Networks and others, that teams that have designed some much more complex and much more complicated technology than what Bitcoin miners need. But they really understand And we were able to work with them to help them understand really what are the key necessities of a miner, being able to control and operate miners based on a target price and profitability for Bitcoin, target electricity costs, things like that. So you can have the miner automatically tune itself based on market conditions, which when you think about operating hundreds of thousands of miners like we do, being able to have automation that does that for you makes operating your Bitcoin farms much more efficient and less expensive, obviously. Plus, you're going to maximize your profitability because of the AI that's built in these systems. So together with Mayfield and Celesta, two premier venture funds in Silicon Valley, we did a round and raised a little over $80 million for the company. And now it's off the ground. They've built their first miners and it looks very promising. So we're super excited about that. So I think a lot of differentiations between other miners. You've got kind of people who are in the third-party hosting and self-mining business, like Riot or Core, and then you have people like CleanSpark, ourselves, who are pure-play mining companies that don't do third-party hosting for other people. And so I think we're going to see an interesting market develop here over the next year to 2 years as we go into the halving, and obviously, depending on where the price of Bitcoin settles post the halving, this industry may expand or it may shrink. So it'll be really exciting to see that.
Very exciting. What a journey, Marathon, as well as you. You bring a wealth of experience to Marathon, and you've built quite an amazing company. You and your team it's very impressive. I love how you have an investment portfolio approach and also vertically integrated from the pools all the way to the ASICs. I mean, it's just amazing. And I want to go into all of that. Automation is key. We live in a world of declining productivity as well as increasing costs. So we need efficiency and innovation. And it appears that Marathon is all over that. So very exciting. And then Oradine, I want to talk about that as well. So before we get into all that, I want to go back to the basics. Bitcoin. Tell us, Fred, what is Bitcoin to you? Now, Michael Saylor says economic energy. People say freedom, truth. It's going to be a global reserve asset currency. Give us your thoughts on what Bitcoin is to you, please.
So Bitcoin to me is an asset that allows people to have full control of their financial holdings. It's fully decentralized. It can't be debased. You can't do fractional lending using Bitcoin. It has all of the attributes of a finite supply asset, where you as the holder can be in full control of it, even to the extent that, not your keys, not your coins, you can hold Bitcoin in your own wallet that no third party can control. So it's a huge benefit. But Bitcoin, to have any value, requires that somebody is mining Bitcoin somewhere in the world. And so we believe that what we do and what Marathon does is secures the validity long-term of Bitcoin, because by mining and being one of the bigger miners in the industry, and even though we're one of the biggest in the world, we have less than 5% market share, most probably, of the global hash rate today. What we do enables people all over the world to be able to hold Bitcoin, use Bitcoin, put their life savings potentially in Bitcoin, lift certain people out of poverty, provide unbanked people access to funding, and all of the things that Bitcoin does for those societies. By being a Bitcoin miner and being able to make sure that Bitcoin will continually be mined somewhere in the world, we can ensure that Bitcoin will have value for the long term. And so that's our mission, really. We secure the Bitcoin network and we make sure that Bitcoin will always be there.
Yeah, beautiful. I actually got that right. You have an amazing website. I urge everyone to check out Marathon's amazing website. I love the colors as well. But your primary mission, you're welcome, is to enhance the Bitcoin network by sustainably increasing your hash rate. So I wanted you to just tell us about that. Some of our listeners may not be familiar with that. Tell us about that, and how do you anticipate doing that?
So we predominantly mine using renewable energy. So we sit, for example, in West Texas on the grounds of a wind farm in a place called King Mountain. And if you look at the videos on our website, you'll see the windmills the big windmills right behind the containers that hold the miners. And so we're buying energy off the wind farm, and then when the wind farm can't produce energy, we're supplementing with grid energy. When we do use grid energy, any grid energy that we use that has a carbon footprint to it, we offset that with renewable energy credits. So the goal for Marathon is to always operate all of our Bitcoin mining 100% carbon neutral. So while we're procuring well over 50% of our energy from renewable sources, what isn't, we offset with renewable energy credits. So unlike using carbon credits, renewable energy credits are generated when you're creating energy using renewable means. So you can get carbon credits by, for example, not cutting down trees. You can generate carbon credits. And so we view that as greenwashing. But if you're actually investing in creating more sources of renewable energy, and you're creating renewable energy, then those offsets, we think, essentially you're saying, hey, I made carbon-free energy here, you can use that to offset carbon energy. So that allows us to operate fully carbon neutral from a perspective of our Bitcoin mining operations. And as we continue to expand, we're looking at more and more fully renewable sources. Hydro is one area. Geothermal is another area we're looking at. One of the key areas we're looking at now is also landfill gas. So if you think about landfills, they generate a lot of methane gas. That methane gas is 80 times more damaging to the environment than carbon dioxide. If we can use that landfill gas to generate energy, then we can use that to mine Bitcoin. So we're taking something 80 times more damaging than carbon dioxide and removing it from the atmosphere, if you would, while producing, granted, some carbon dioxide. But we also generate a huge amount of renewable energy credits by doing that, which can more than offset any carbon we're creating. So we believe that our future is very much around identifying these types of stranded energy. There's tons of geothermal energy stranded in Africa. There's tons of hydro energy stranded in areas where they built dams, they produce energy, but there are no customers to buy that energy. There's tons of solar energy that's available that can't be sold because there aren't adequate amounts of transmission capacity, interconnect capacity. And if you look just in the US today, and this has become a big issue from FERC, which is the federal energy regulator, that the lead time today for an renewable energy project just to connect to the grid, and you have to connect to the grid to sell your energy, has gotten so long because of the paperwork and the bureaucracy that they're starting to strip out kind of many of the contingencies and conditions previously that existed, because the backlog had reached a point where almost 80% of renewable energy projects had a likelihood of being canceled because they were never going to get to financial viability, because they would never get to connect. And so we believe the best thing we can do for renewable energy transition in the US and other parts of the world is to be a baseload customer for those sites. We can go partner with a solar developer. They can develop a solar site, sell us all their energy until they get a connection to the internet and can sell the electricity. And a solar site that has been built is going to get preference for interconnect over one that's just in planning stages because it's been financed and it's been executed. So we provide a huge benefit to the renewable energy sector that way. The other way we provide it is by balancing the grid. Again, Bitcoin miners have this amazing capability of shutting off quickly and coming back on quickly, allowing the grid operators to balance. And what very few people realize is the grid is not this constant amount of energy where the same amount of energy goes in and the same amount of energy comes out at all times. It varies depending on load. You as a consumer always want electrons coming out of the wall. The problem is generators can't put more energy into the grid than you're taking out. And if you look at during the course of the day, there's a lot of variation to how much energy people are using. And so the grid operators have to constantly balance the load on the grid and the generation that's going into the grid. And it's really hard to turn on and off a power plant, but it's really easy to turn on and off Bitcoin miners. And so that's the role we play in the energy grid, which is something, again, we're very focused on being able to do and proud to do it in Texas and North Dakota and other states.
Love that. marathon, truly thinking outside the blocks. Absolutely. This is amazing. I mean, we have all this wasted energy. We have rolling blackouts. We have so many issues nowadays. So that's amazing that you're doing that. And, it's just key to soak up that excess. And the fact that you're able to do that and convert and use it for Bitcoin mining, it's just brilliant. It's just amazing. I love that. So that was a key concept that I wanted to talk about. Thank you so much for enlightening us about that.
Yep.
Marathon is decentralized, just like Bitcoin. How perfect. So I know that you have fleet across the world. So you're diversified and you're decentralized with regard to location. However, you also outsource, and I love that, to third parties. Could you tell us about that thinking? Was Marathon always like this, or is this something you brought to the company? How has that evolved, and what do you plan for the future to continue decentralizing?
So this is part of a transition we started in early 2021. So if you think about the challenge for Bitcoin miners is if you're going to build a brand new site, you have to first identify a location where you have access to power. So you have to find a substation, you have to negotiate with the power provider to get access to that substation and be able to put load on it. Once you've gone through that whole process, you then have to tie up some land where you can build your data center. Then you have to order miners, and then you have to order containers or build a building. And so the process from start to finish can be as short as 12 months or as long as 24, 36 months. And we wanted to grow very rapidly. And so we wanted to operate with agility and be asset light, meaning we wanted to essentially use other people who were going to go identify locations, build sites, and then we were just going to go plug our miners in and grow. Now you could say, but that's not economically sustainable long term. Well, if you think about it, you want to mine as much Bitcoin as you can before the next halving. And so time to mine, the time it takes for you from when you invest $1 until you're reaping Bitcoin out of it, is super critical. And so if the difference in the cost to mine a Bitcoin is, a couple cents a kilowatt hour, in times when the price of Bitcoin is going up, that has almost zero impact. And so if you can get time to market by doing that, you can get ahead of everybody. And that was our focus in 2021 when the market was on a tear. It was just deploy as fast as we could. And so then you go in the crypto winter of 2022. And of course, the market now changes to one where you have to be very efficient. And so we started there looking for ways to increase our efficiencies. So today, as you mentioned, we operate a portfolio approach. We have Bitcoin mining facilities where we work with third parties. We have who own and operate those sites. We just bring our miners, plug them in. They charge us a fee for energy plus hosting. We also have sites where we have designed and built the site together with partners, such as in UAE, where we designed the full site, both sites, and we partnered with our partners in UAE locally for capital, and they invested in the site, and we've built that site. There's now an operations team on the ground running that site, and that's more one where we control the cost of energy and operate the hosting site. And then we have things in the middle where we have a third party operating a site, but we control the PPA for the energy ourselves, and we're controlling the direct cost of energy. So by having a portfolio approach, it's just like with investments. You need diversification because in times of rapid growth, you can use the agile asset light model. In times of price pressure on Bitcoin, then you can use the owned and operated model. And if you want to continue to grow quickly, you can use the third party capital model, which is kind of what we did in UAE. So we believe we have a very diversified approach to it. We also are diversified geographically, Texas, North Dakota, UAE, for example, and we'll continue to diversify over time. So we're about 50% domestic, 50% international. And then we're also starting to diversify the hardware that we use, not just using Bitmain machines, but also beginning to use things like Authorize and others. And then, different technologies, immersion, single phase, dual phase immersion, as well as air cooled. And so we're super excited about what the future has in front of us. And we're also looking forward to contributing more and more technology to the industry.
Very exciting. I know back in February when I heard the news about Abu Dhabi and your expansion there was very impressive. Could you give us updates on how that facility is going on over there?
Sure. So we ran a pilot late last year with 1 megawatt of energy to see, was it feasible? We're talking about ambient temperatures well over 100 degrees, where in the US, you can't run air-cooled miners much above 90 degrees. So it would have to be immersion. Plus you have high humidity, which makes air-cooled even harder. And so we went about designing a solution where we could essentially build immersion tanks that once you started operations in those tanks, they would need very little human intervention to operate. They would essentially have all of the automation and IoT capabilities so that you could remotely operate them. That pilot site ran for over 100 days before a human being had to go back on site and touch anything. So that proved to us that we had kind of cracked the code on it. And then we worked with our partners to negotiate an agreement, signed that agreement in February, and then went about locking up the actual physical sites. There are 2 sites. One's a 50 megawatt site, one's a 200 megawatt site, and tying up the power agreements and all the other kind of things that we would have to do. Now, this is an example of a deal that went very quickly. We signed that agreement in February. We went live with the first miners mining in July. So today, the 50 megawatt site is virtually fully deployed and operational. The second 200 megawatt site has been, all of the construction work's been done, the containers are being delivered, miners being installed, and that should start mining here roughly in the next 30 to 45 days, and then that'll be fully complete by the end of this year. So super excited about that project and how well that's come together. Granted, part of it is because we had the right partners on the ground there, and who had the right amount of influence and control over things. And part of it was just, we really designed and built a top-notch facility and how that operates. So we're very excited about that. We're already mining Bitcoin there, and that appears to be a great success. So.
Absolutely. Very exciting for sure. And absolutely, it's always important about your partnerships. So that's always key. So thank you so much for filling us in. I know a lot of people are interested to know more about that. I want to talk about your vertically integrated technology, which I find just fascinating. And, on your website, you talk about it, but if you could tell us more about it, you say that control of influence each aspect of the Bitcoin mining stack from pool down to ASICs. Could you tell us about that, please?
Sure. So, Apple, again, is the great example of that. If you think about the Apple iPhone, this iPhone, everything from the iCloud software, the app marketplace, iTunes, etc., all the way down to the operating system on the phone, the chips, the ASICs in the phone, a lot of the components, all designed and owned by Apple. When you do that, you can create efficiencies and integrations that you can't do when you're using third-party products. And here's why it's so important. If you think about Bitcoin mining today, the vast majority of miners use third-party pools. Those third-party pools have to support a broad array of miners, all from old generation S9 machines up to the new generation machines. And they have to support them so that they'll all interoperate well. And they have to be able to support miners connecting new miners, turning miners off, hash rate coming on, hash rate coming off. They have to support the security aspects of being able to validate that a miner that's connecting to the pool is the miner they say they are, and that hash rate's not going off in different places. And then mining firmware also has, the firmware and the miner is designed for that miner to run as a standalone miner. So it has a pretty heavy software stack in it, as opposed to just having the bare bones that it needs to be one miner in a huge fleet of miners. And same thing with the ASICs, the ability to control all the way down to a single ASIC on a miner versus the whole miner. So for us, by being able to strip out all of the inefficiencies of third-party pools, because we operate a private pool, we don't have any third parties, stripping out all the inefficiencies of the firmware in the miner, so it only has the core pieces it needs. And so when the miner and the pool communicate, they're doing it in a way that's extra efficient compared to how third-party pools. Same thing all the way down to the ASIC. Those little efficiency gains means the time it takes for us to do things is infinitesimally smaller than third-party based products. And that little tiny difference has a huge impact, because in a race to win a block, it's a nanosecond difference between when one miner wins it versus another. And so the only thing we're looking at is stripping out inefficiencies so we can have a better chance at winning each race for every block. And that's what having a vertically integrated tech stack potentially gives us.
Wow. 3 key words there that are so important nowadays: efficiency, streamlining, and innovation. And that's key. And we need that automation, and you're removing those inefficiencies. Absolutely amazing. And I love how we discussed before how you leverage and you outsource your third-party hosting. However, you operate your own mining pool called Mara Pool. So very impressive. I love that. Now, I want to go to your Bitcoin treasury. You are one of the largest holders of all publicly traded companies in North America. So Marathon takes a long-term view on Bitcoin. And what I noticed is that you reinvest the commodity that you produce. Could you tell us about your thinking on all that and how Marathon views Bitcoin with this long-term view?
So we believe, because we believe in Bitcoin, that holding Bitcoin for the long term is very important. By the same token, no pun intended, we believe that, like oil companies, they produce oil, they sell oil to fund their operations, and then they bank the profits. For us, the profits are the excess Bitcoin that we mine over and above our operating costs. If you go back 2 years ago, we weren't generating enough Bitcoin to cover our operating expenses, our energy costs, our people, and all that. So it had to be in the marketplace where we were essentially taking equity or debt and using that to fund operations. Today, we produce more Bitcoin than it costs for us to run our business. And so that excess Bitcoin, we continue to add to our treasury on the balance sheet. So we're not having to dilute our shareholders for operating expenses, and we're able to operate virtually debt-free. The only debt the company has today is a convertible bond that we put in place at the end of 2021, which expires in 2026, at the end of 2026, which has a 1% coupon on it, which is very inexpensive debt for us to carry on the balance sheet. But that's the only debt we have. Everything else we have is ample amounts of cash and Bitcoin. And today we have, somewhere north of $300 million of Bitcoin on the balance sheet. And typically we end each month with around $100 million of cash on the balance sheet. So in a position where we can take advantage of anything that happens in the marketplace. Plus, we have a very liquid stock, which allows us to have the opportunity that if we need to, we can sell equity to be able to take advantage of situations. But we're very focused on everything we do, really having a goal of, does this create value for our shareholders? Right. So, whether we're expanding in a particular region, we look at our whole group of stakeholders, and stakeholders include more than just shareholders. They include our employees, they include our partners, they include the societies in where we operate, right? Are we doing things that can help the cities, towns, countries where we operate be more efficient, provide better services to their people? And UAE is this great example of that. This is a country where, though it's extremely wealthy, in Abu Dhabi, in the wintertime, they only need a gigawatt of energy roughly to operate the grid. In the summertime, though, they need 4 gigawatts of energy. And so you have this asymmetry in the amount of energy. They have all this capacity that they only use at peak in the summertime. They also desalinate seawater to make it drinkable water so their people have access to fresh water. Well, how do they do that? Well, they use the heat from the power generation, which means that because water consumption is constant, as opposed to electrical consumption, they have to keep this power generation running all the time, even though they're not necessarily selling the energy. Plus, the government pays a subsidy for the electricity to keep the price low for the population in the country. So by being able to partner with us and mine Bitcoin with the excess energy, they're able to do a number of things. One, they're not wasting the energy that they use that creates the heat for the desal. They're using up all of that excess capacity in the wintertime and in the spring and autumn and parts of the summer. The Bitcoin profits that they earn through the partnership allow them to compensate them more than what they're paying in the way of subsidies to their population for the electrical costs. And their grid operates much better. And so huge benefit to the society and the population in the country. And so, that's what we try and do. Same thing with what we're doing in West Texas with, the wind farm operator there. That wind farm is able to sell us energy and be more profitable so they can lower the cost of energy they're selling to the grid. And that lowers the overall cost of energy for people in the state of Texas. If we weren't using the excess energy, they would have to sell at a higher price to be profitable.
Wow. Marathon is creating value, not only for its shareholders, but for everyone that does any business with them and any partnership and all the people in these areas. Very impressive. Sustainability, social responsibility, and efficiency at the core. When you tell us that you're debt-free, except for this minor, basically almost insignificant bond that you talk about, we have rising costs of debt and capital, and we're higher for longer, most likely. And to see a company that can run as efficiently as Marathon, being basically debt-free, it's very impressive. And thank you so much for sharing that, Fred. I have to say, I've known quite a bit about Marathon, but this is really, really enlightening. And to all the listeners, very impressive. I want to talk about your investments. Now, Marathon invests in the most advanced technologies, and Authorizing, which you mentioned earlier, is definitely one of them, extremely advanced. I have to say, to be able to have their series, they're raised during a bear market, and very exciting. I want to talk about how they leverage AI, blockchain, and privacy to help create. They're going to be an industry leader, in my opinion, what they've been able to do. So tell us your thoughts with Authorizing and what you foresee for the future there.
So, obviously, we're an investor in the company. They have a product roadmap that we've helped them. We provided input to their product roadmap, but they're an independent company. They're off doing their own thing. And, we're super excited about the future and where they're going. They're very focused on looking at the convergence of AI and blockchain. We believe that, like many people, if you think about these large learning models and AI, there's an old expression in the computer industry: garbage in, garbage out. If you give biased data to an AI learning system, it will have a biased approach to its knowledge. And so there will come a time where people will want to be able to authenticate that the data that went into the AI learning model was 100% true and isn't biased or isn't in any way, hasn't been adulterated. Because there's an attack vector with AI, which is you essentially purposefully feed an AI model incorrect data, so it'll give an incorrect output. And this goes all the way down to AI systems that are used to control factory processes and grids. If you can cheat an AI's sensors, meaning you can get an AI to think a water pump is working fine, but it's actually broken and flooding somewhere, then it won't know any better. And so more and more companies, as time goes on, will look to use blockchain technologies to post sensor status, telemetry systems, all sorts of data, so that AIs will know this data is valid and can't be manipulated because it's on a blockchain. So we believe that there'll be a huge need for blockchains that intersect with AI going forward in the future. And one of the things Authorizing is working on is looking at how that's going to happen. They're looking around things like zero knowledge proofs, et cetera. And so Bitcoin mining is kind of one thing they're doing. They're also doing a bunch of other things that I think are super exciting. And hopefully we'll be able to benefit from those as we continue to invest in other technologies. We look at Bitcoin as being the most secure, the most decentralized blockchain out there. We think it has many advantages over Ethereum from a perspective of security and also decentralization. Ethereum is a programmable blockchain. Bitcoin is not. Bitcoin is more similar to what the internet is like. The internet runs on TCP/IP, and oh, by the way, the internet's been around for lots of years, but most internet applications and devices still run on TCP/IP version 4, which has been around for decades. Even though we've since advanced to version 6 and beyond, most things run on version 4. And the benefit is because the internet doesn't change, everything built on top of it can continue to advance and add value. We believe Bitcoin and blockchain is the same way. The Bitcoin blockchain, the most secure, most decentralized blockchain out there, it does one thing really well, which is it manages its ledgers, it manages settlement. And so you can build on top of Bitcoin, whether it's with Lightning, other things at layer 2 and layer 3, all sorts of very impressive applications. And with the advent now of Taproot and Taro and these other technologies, you'll now start seeing smart contracts and side chains come to the Bitcoin ecosystem. And we believe because it's the most secure and the most decentralized, financial institutions or institutions that need to ensure that the data that's on the blockchain will always be there, can't be adulterated, and will be secure, are going to seek to develop and design stuff to run on the Bitcoin blockchain. So we're very focused on investing in technologies that are the picks and shovels, if you would. What are the things that people are going to need to be able to use to better and more easily develop technologies and applications on top of the Bitcoin blockchain? We're not going to come out with the next DeFi application, but we may very well come out with a tool set that lets you build one.
Very nice. I'd like to ask you, Fred, if you could share with us, I understand if some things can't be shared, but any investments vertically or horizontal integration that you're looking for your next acquisitions, whether it be miners or anything else. Can you share where you're looking or what your thoughts are?
Sure. I mean, the high level, when you think about consolidation in this industry, the key driver, what's of most interest to people, is going to be access to low-cost energy and good power contracts. If you buy a miner that is in financial trouble, they're in financial trouble for two reasons. They either have an upside-down capital stack, they borrowed money at too high interest, or they did something wrong financially. By wrong, I don't mean illegally, I just mean they mismanaged their finances. Or they have bad power agreements, and so they can't mine profitably, or they have old miners and a good power agreement. The problem is, if you think about it, in the Bitcoin mining industry, when the price of Bitcoin drops, the value of all the assets in the industry go down. And the replacement cost essentially also goes down. And so as we look at acquisition targets, it doesn't make sense for us to buy a company that has old generation miners running at poor power prices, with potentially management team that hasn't been able to execute well. Hence, they're in trouble. They need to go and be sold. So we're only looking for really assets that will add value. Again, it gets back to this comment I made about we're trying to create value for our shareholders. And so, where we look for things are access to power, low cost, partnerships that are critical, access to technologies that are critical to make this industry more efficient, more productive, and get us towards lower cost energy. So, if you were to kind of ask me to wave a magic wand, I would say that the core technology I'm looking for is what's going to create zero cost energy for me. Because if I have zero cost energy, then I can mine no matter what the price of Bitcoin is, no matter what the global hash rate is, and it doesn't cost me anything other than capital to buy miners.
Absolutely. It's always about increasing those margins. And if we can lower our expenses to barely nothing, as you referenced, then it's all pure profit. And absolutely I like that strategy, that investment portfolio approach. Once again, diversification and maximizing returns while minimizing risks. So key points there. Thank you so much for that. Recently, I think it was yesterday, an 8K came out saying how Marathon increased authorized shares from 200 million to 500 million. I know some people had questions about that. Could you tell us any plans you have with those higher amount of authorized shares? If you could tell us about that, please.
Sure. So, one of the challenges we and other miners in our industry have is typically because the initial interest in Bitcoin miners from the stock market investors was predominantly from retail investors. So we have thousands and thousands of investors, many of whom don't vote on matters. And so we have tried a couple of years in a row to pass increases in our authorized shares. Because you need over 50% of your shareholders actually, or shareholders representing over 50% of your shares outstanding and issued to vote, it can be very hard and very expensive. We have to hire proxy solicitors, we have to print proxies. It's a lot of expense that's destroying value for our shareholders as opposed to creating value, because we're spending money on something that really could be better spent on investing in growth instead. And so we said, okay, let's find a way to get the authorization to increase shares, and let's get an authorization that's big enough so we have plenty of shares for the future, so we don't have to go back to the mill every year. So think of it as optionality. We wanted to have enough shares available so we have optionality. Doesn't mean we're going to use them in the short term, the medium term, and maybe not in the long term. Who knows? Don't know yet, but it gives us optionality. And if there's one thing you'll always hear me talk about is, the one thing you never want to lose is optionality, because that gives you the ability to take advantage of luck. And luck is really manufactured. It's opportunity meets preparation. And part of preparation is optionality. So we think that having the shares authorized gives us the options now, midterm, or in the long term to be able to do things and take advantage of situations in the marketplace to move quickly. Just if you go back to this convertible bond that we raised in late 2021, we were able to raise it at the peak of the market, again, with a 1% coupon on it, in a time when, soon thereafter, nobody could raise any capital for Bitcoin miners. So being able to time markets and do things requires that you're prepared and able to do it. And that's why we want to be in a position where we have maximum optionality.
Love that. Well said, Fred. I actually said similar yesterday when I saw it. It's important to remain liquid, to seize opportunities. And as a company, increasing your authorized shares, so you have the capability, should you need to seize any opportunities when the time is right, like you did with that bond, very smart there, and you have that capability. So optionality is key. Very well said. I love that. Perfect. That was great. Now, I want to go into the mining halving. Okay, a lot of people are confused as to what's going to happen next spring, and I'd love to hear it directly from you, CEO of the leading Bitcoin mining company, Marathon. Tell us and our viewers, what do you foresee that will occur during this mining period, and what are your thoughts before, during, and after this halving?
Well, let me break out my crystal ball.
Well, just based on historical patterns, what do you think can happen during that time period?
So I think a couple of things. One is the price of Bitcoin these days is driven much more by liquidity cycles than it is by halving cycles. The halving cycle is a psychological event, and it only impacts miners, really. If you think about investors in Bitcoin, today, at maximum production, the Bitcoin blockchain issues 900 Bitcoin per day in subsidies, block subsidies. That's 900 Bitcoin per day in a market where there trades anywhere from $10 billion plus of Bitcoin a day. So the stock to flow kind of theory about new supply coming to the market, if miners sold 100% of their production, it's only 900 Bitcoin a day. It's not going to move the market hugely. Bigger events are the emotional events like, FTX, or the US government selling its Silk Road stockpile of tens of thousands of Bitcoin. Those are things that move the market. So it's not the stock to flow at this point. That, I think, in the last cycle was the last time sort of mining supply really impacted the price of Bitcoin. So it's all about global liquidity. So if you think about global liquidity, we're going into a cycle now where the US Fed will likely stop raising interest rates sometime this year. Likely start easing maybe back half of next year or later. But at the end of the day, if the US stops raising and other countries and economies keep raising, you're going to start seeing a decrease in the value of the dollar. When the dollar decreases, that correlates to an increase in the price of Bitcoin, especially as most investors in the US are looking at dollar denominated Bitcoin anyway. So in other parts of the world, as the value of the dollar drops, typically what ends up happening is the price of Bitcoin goes up. There's a very high correlation between the price of Bitcoin and the value of the US dollar. It's inverse. There's a very high correlation between liquidity cycles and the price of Bitcoin. And lots of economists and lots of chartists and technical analysts have, been tweeting about this over the past 6 months or so. So if you look at these global liquidity cycles, I think what you'll see is, if there is a mild recession or a sector by sector recession in the US, it means the US is going to have to increase liquidity flows, which would bode well for Bitcoin. You can see that Bitcoin has started decorrelating or discorrelating from equity markets, where traditional was very highly correlated. As a matter of fact, the volatility in Bitcoin is less than that of the NASDAQ today. So it's becoming much more what people really expected Bitcoin to be, which is essentially this digital gold, if you would. Great place to store value. You put your money in Bitcoin, the markets are going up and down and gyrating, and it's holding its value. So if you think about global liquidity flows and what people are forecasting, I think there should be a tendency for Bitcoin to increase in price as we go into next year and into the latter part of next year, early part of 2025. And again, I'm talking about the price of Bitcoin from an investor standpoint, not from a miner who's worrying about halving cycles. Mm-hmm. So if you layer on top of that the halving cycles, yeah, it happens to match out pretty well also. But if you back test liquidity, global liquidity and halving cycles, they tend to march fairly correlated. So that's the price of Bitcoin. Then you have to look at global hash rate. So global hash rate impacts miner profitability because it determines how much hash rate we have to contribute to the global hash rate to be able to mine the amount of Bitcoin we need to mine. And so you've seen global hash rate growing, not so much because publicly traded miners like Marathon are adding lots of hash rate, and we've tripled the amount of hash rate we have online kind of at this point in the year compared to where we were at the end of last year already. And we'll continue to likely grow over the balance of this year and into next year. But there are also new miners that have come into the marketplace. Look at our partners in UAE. There are miners in Russia that have added huge amounts of capacity. There are miners in other places. Kyrgyzstan, there was an article about the government of Kyrgyzstan wanting to start mining there. So you're seeing more and more sovereign mining starting to happen around the world. And I think that's going to continue to happen. So what does that mean? Well, for people that invest in more miners and grow mining capacity, they have to have access to capital. There are very few miners today in the US who have good access to capital markets because liquidity has kind of dried up. So you have the larger miners, Riot, ourselves, and some others who have the benefit of being able to tap equity markets. Many privately held miners don't have that. They only have debt markets, and with debt being priced where it is today, you can't get that, and you can't get equipment financing today. So that's going to drive the bigger miners to keep growing. And depending on where Bitcoin is at the halving, if Bitcoin isn't above 50,000 at the time of the halving, you'll see a drop in hash rate. Reason why is Bitcoin at 50,000 with the hash rate continuing to grow at the rate it's been growing this year, and it's up considerably over last year, is about the same as Bitcoin at 20,000 pre-halving. So if Bitcoin were at 20,000 today, there are a lot of miners who would be squeaky wheels and having problems. So if Bitcoin isn't north of $50,000 come the halving, there are going to be miners that are going to have to unplug miners. Mm-hmm. And so some analysts are forecasting a 20 to 30% drop in hash rate. We'll see. If Bitcoin is above 50,000, that may not happen. So that's going to kind of drive things. So we kind of look at three scenarios always: bear case, bull case, base case, and we plan for all three contingencies. And again, we maintain optionality so we can hit the accelerator button if we think it's going to be a bull case. And if it's going to be a bear case, we have contingency plans for optimizing. So we're constantly focused on kind of three things as a company: energizing capacity, optimizing existing capacity, and diversifying. Those are our three things that we focus on. And we put kind of numerators to those, numbers to those that are the KPIs that drive our teams. And that's what we're focused on. A very simple set of goals, and we keep everybody really focused on it.
Love that. You answered it perfectly. That's exactly what I was looking for. And thank you so much. Challenges bring opportunities, and you can definitely expand your business and growth and take advantage of opportunities that appear during this halving cycle. And you've got all the bases covered. Love that. The optionality is key. Thank you so much, Fred. This has been absolutely wonderful. Please tell our viewers how they can follow you on Twitter and LinkedIn, as well as read more about Marathon Digital Holdings.
Sure. So I'm on Twitter at the letter F, the letter G, and then THEL. You can find me you can connect with us at Marathon is mara.com, MARA.com is our website. And, just search for me on LinkedIn and you'll find me there by name. So luckily there are not too many people with my name, so I'm easy to find.
Absolutely. Well, thank you so much. And thank you to all the listeners.
Thank you very much. It's a pleasure to be on.